Most people borrow money to buy a house unless they have wealthy relatives or a lot of cash in the bank, or they have entered into a lease purchase arrangement. In order to apply for a mortgage loan, there's some basic standard information that you're going to need to have. The first thing you should know is your credit score. You should have checked it in advance, made any corrections or changes to the information that's reported on there so that it can be explained to the bank or mortgage company that you're going to contact. Also, the information on your credit score, as I explained in the other video, gives you a number. You need to know that number so that you can evaluate the interest rate that you would be eligible for to borrow the money to buy the house. You're going to need a couple of years of tax returns, and including in that your wage information, your W-2s, pay stubs, things to show how much money that you're making and verify that income. Any other income you have, such as child support or any type of independent contractor income or trust money or other regular income, you'll need to know that also so that you can fill out the application. Then you'll also need to have information on the insurance for the house and how much that's going to be, and you should have an idea where your down payment is coming from. Either it's in savings or you're going to convert assets, maybe you're going to sell some stock. You should be able to identify where that money is coming from, and the bank will ask you to verify that information for them. So you have this information together. Some places you can apply online. The applications are fairly similar. You're going to need your name, your date of birth, your social security number, your address, the information that I've just detailed in the copies, that they're going to want to see those copies. Then you'll be filling out the application that will include a personal financial statement. Sometimes it's called an application, and sometimes it'll just be submitting the personal financial statement. They'll verify your employment information, your prior address, and then the personal financial part is a statement of your income and expenses and assets and liabilities. So your monthly expenses, what are your regular payments each month, and based upon your income, because they want to see how much debt you can afford so that you'll be able to meet your other expenses and pay them back on the mortgage. Then on your assets and income section, what do you own already? Do you own a car? Do you own other property? Any boats, investments? Do you have money owing to you from other people that's documented in a promissory note? And then what type of long-range debt do you have? Do you have credit card debt? Do you have other loans on property or vehicles? Do you have student loans? And then that will all be computed by the bank. They'll evaluate what your income to debt ratio is. They'll match that against the value of the house and the amount that you're trying to borrow, and they'll also look at your credit score, and then all of those factors based upon that particular bank or mortgage company's policies will determine whether or not you get the loan.